like I said, all right, um, the entry method, right? The analysis, the technical analysis, right,
Yeah,
is what we do, what we are doing, right? And um, when we talk about Dow theory, we are still going to talk more about the whole concept of the technical analysis as well, right?
yeah,
And like I said previously, the entry method, there is a difference between the whole technical analysis and
yeah.
and now when you're done with technical analysis, then entering a trade. Right. So remember that for on this candles, right, and on this one too, like these samples, right? All these samples will have to occur on the daily time frame. It is not on the 4 hour or in 15 minutes, it's on a whole day. So this whole candle will have to be on a whole day, right? So for everything that we are doing, it has to be on a whole day. Right. So
Yes.
this candle has to be on the day. So it is the candle that will have to break close above the price. Then we will know that okay, this price has been broken. That is a whole day candle, right? So is at I will still show
Which
you.
price has been broken? Sorry, which of the prices?
It will be this price. This It will be at this price this week here. Remember, we
Yeah,
talked about, yeah. So it will be at the price where, remember, I talked about that we are lucky as technical traders because for every, because we are lucky as technical traders, right? Because the price gives us an evidence of how far it has traveled in a candle, all right?
yeah,
Yeah. So the how far that price has traveled in a candle leaves a timestamp. You can see it on the weeks. These are weeks. That is what it's called. It is the
yeah,
print. It is the print, right? It is the print, right? So for this green candle, you could see this is the print. This is the print. That's the extreme of the candles, right?
yeah,
That is the price because the body of the candles does not print price, but the top and the bottom of the prices leaves specific leaves specific price stamps where price has traveled. Do you understand what I mean? The
yeah,
whole, yeah, right. So the whole body of this price here does not say where price has gone to, the whole body, all right? But you have the price, the extremes is leaving us with specific evidences of at this price, price has been to this place. At this price has been to this place. You understand what I mean?
yeah,
So yeah, so that is it. So right, so on this one right here, the wicks, that's the up and the bottom. It's price has traveled, price traveled at 115.6. Can you call the prices? Can you call on this particular candle? Call the prices where price has traveled to.
so it traveled from 115.60 to 120.18.
So you understand what I mean, right? Like
Yeah,
first, right? the the anatomy, right, of a candle, of the anatomy of a candle is if a candle opens, right, it has an open, it has a low, it has a high, and it has a close.
yeah,
All right. So what is important to us as technical traders is the high and the low of prices. right? So all these candles, or every candle has an open, a high and low, right? But there are a couple of candles that does not have a high and a low, but usually candles have highs, open, high, low, and they close. You understand? Right. But what we use, what is important to us is the high and the low of prices because
Okay.
that shows how far price has traveled, right? So, for example, when a candle opens like this is the open of when a new candle opens. This is the open.
Yeah.
This is the open. Okay, let's say on a candle like this. Okay, let me just give you an example before we go to the chart. So this candle opens like this. So it shows you the open. If it comes
Yeah.
down here, if it comes down here, right? If it's going to leave a mark here that it has, the price came here previously, right? And then if it goes up here like that, above this price, right? It is going to,
Leave traces.
if it's going to leave traces here, and then if it comes down, then it closes here, right? So a candlestick has an open, it has a low, it has a high, and then it has a close. That is the
Has
analogy.
a low, has a high, has a close.
Yes, all candles does.
Yeah,
All right. So
I get that.
what it's important to you, right, is the high and the low of prices.
Yeah,
That is the most important aspect of what you need as a trader, as a technical trader, right?
yeah,
Because if you want to mark your resistance and your support, you mark here. This is how you mark, right?
yeah,
Okay. So that is so for every advance in price, for any advance in price, you'll still need a daily candle, right? To close either above the price or below the price to actually show you the direction where the market is going to.
yeah.
And that
I
is
think I
when
get
you
that.
Yeah, and that is when you have to use the if then statement for every time that you're trading for a day, for any day that you're trying to make your analysis, right? You are always using your if then statement, right? Because it's not in your will, but in thy will be done. That is just it.
Yeah. Okay, okay.
So if the daily does not, and if it's just if it's still within here, then you've got nothing. The only thing you have to do is until it does, you do something. And if it doesn't, you stay put until it does.
I get that.
So it should just be on your head. You don't care about if you don't care about what the company or any company does. You don't care about what any individual does. You don't care what is important to you is what you can see, the price you can see. That is what you be focused on.
Yeah,
That is all you have. That is the data you've got, right? So and on calculating, getting into entries and executing trades, putting stop losses, putting take profit. What we use to do that is the ATR, the average true range, right? So we'll still get into that. right? Like as I told you, it is this yellow, this thing here. So we will still get into the average true range, the supply and demand. They are entry methods. They are not used for technical analysis. Supply and demand is not used for technical analysis. We do technical analysis on just support and resistances. And you know, before, if there is no trade, right? If there is no trade, if there is no area of least resistance, then there is no supply and demand. Let's say, for example, that we've got a couple of resistances at these prices.
Yeah.
Let's say there have been a couple of resistances at this price, like on or above all these highs, right? Then that means the level of least resistance will be down because above this high, there are clusters of resistance levels. Do you understand what I mean?
Yeah.
Yes.
That's clusters is like all the lines of resistance.
Exactly, exactly.
Yeah.
And remember, they are all R1, R2, R3, R4, R5. You understand?
Yeah.
Yeah. So that is it. So is it clear?
Yeah.
Yeah. So if for someone that is buying, you won't be buying, you won't carelessly be buying into resistance. It does not make sense.
Because it's
So
not gonna go past it. You buy
exactly,
above it.
exactly, you buy above it. When it is here on this type of resistances, you sell with the resistance, you sell with the resistance after it has given you what it needs. You sell with the resistance, you don't buy in resistances. You don't buy
Because
in resistance.
it could go deeper.
Exactly, that is carelessness. You understand? So you're correct.
Yeah.
So down is the area of the least resistance. And remember that we don't just put resistances. Resistances occur from evidences that we've got. The evidences that we've got. And the evidences that we've got are the price stamps, are the price prints that we can see.
Yeah.
Okay. So that is resistance. So as a technical trader, we want you to think technical. All right. Don't think fundamental. Don't think on the news. Don't think about what the insider trading is doing. Don't think about that. Just think mechanical. Think technical. Right? Just think technical. What you're dealing is with the price on your front. Don't think about the
Yeah.
company, about the news, about if they are, don't think about it. Just think on technical. That is just what you have to think about. And that is what should always be on your mind. Technical. That is it.
Yeah.
You understand? Because if the price is wrong, so why is the price printed? You understand? The price says it
Yeah.
all, nothing else. You understand? So that is
Yeah.
that is it. So for every break, right? For every break, that break will still have to occur when a subsequent day you get a close. For example, on a day like this, like we now come the next day and then we see something like this, then we'll be happy to like get a retest on the next day. Right. So this pullback, it is called pullback. Right. So this pullback now occurs, and then on the next day, you can be able to trade, right? So this pullback, like this coming down here is, well, we'll talk about it when we start dealing on, when we start discussing that here, right? But
Yeah.
for every time that the market breaks a price, a major price level, a support or a resistance, it naturally it always pulls back to confirm the trend.
Mm-hmm.
Naturally, it does. It must have to pull back, right? And that pullback will have to be on a counter trend move. So if we are expecting a pullback, we are expecting a red type of candle. Do you understand? We are expecting a red
A
candle,
little red. Yeah.
a full day red candle. If your analysis
Oh,
is on daily, everything you do has to be on the daily. Right. So let's say when this move is established, so if it got established maybe on a Monday or on a Tuesday, right? So that means now that you've got something to trade on the next 2 days, right? So you leave the next day, tomorrow, the next day for a pullback, right? For you to trade on the next day. You understand? Everything is by patience. Everything is confirmation. You just don't back. You want to trade. You understand?
yeah.
Yeah, so that is it. So that pullback is will be on a red day, and then the next day you can continue your trend. So, but on that pullback will be counter trend to the normal trend. You understand what I mean?
What if on that pullback, yeah, you analyze it and you leave it till the next day because it has to be one day. You leave it
Yeah,
till the next day.
yeah.
And what if you place a trade and it continuously goes down?
If you leave it and it continues, you're going to see it's going to show if the move wouldn't happen, right, it is going to show you an evidence from the price, from the sharp, from the patterns, right? If
Yeah.
there is a bearish pattern, if it doesn't want to advance, right?
Okay.
If it doesn't want to advance, it's definitely going to show a bearish pattern. It's going to show, perhaps it's going to show a resistance, a very strong resistance, maybe on the 4 hour time frame. But we're not dealing on the 4 hour time frame, right? So maybe it's going to show the pattern, right? Or it most definitely might show you a clue on the lower time frame,
Yeah.
which is on the 4 hour time frame. So you're going to get a clue, and it's not going to leave you clueless. Technical analysis and analyzing the charts this way, right? It's not going to leave you clueless.
It gives you a clue what could happen.
Exactly. It does leave you a clue.
So there's a more chance of like you said, all the information is on on the charts.
Exactly. Yeah. Yeah.
Yeah. I feel you, I feel you. Yes, sir.
Remember some of the things I said. You tread through the area of the line of the least resistance. For every analysis that you do, after doing your whole technical analysis, where you are going to arrive at is at an imbalance, right? And at an imbalance, the market does move swiftly, right? The market moves faster in an imbalance, and we are lucky as technical traders because at the end of every day, the market leaves us with price prints, how far
Yeah.
and how low it has traveled, which are very important to us, right? And which is an evidence of how the distance that the market has gone, right? So, and for what makes price moves is the interaction of buyers and sellers. The price isn't just moving, it's the interaction of buyers and sellers that makes price moves, right? And all our analysis and any analysis that we do is on the daily time frame, right? Because God did not create the earth in minutes, He did not create the earth in seconds. He created the earth in days, and we need a whole day to know to be able to predict what is going to happen in a couple of days. You understand? So
Yeah.
if we have to be patient for a day, right? You have to be patient for the day. that a full day to happen. You understand? So that is it. The day is very important to us, and for everything that we do, we are grateful that we are technical traders, and for everything that we are so uh, like thankful that in any day we have the high and the low of prices. That is just it.
Yeah, fair enough, fair enough.